Hi, this is Shane with the Rational Trader. It is Monday the 30th and up 245 today in the NASDAQ. Truly a no-thought trading day because I stepped away at 7:15 down $50 and then was not able to look at take a look at the monitor at all until after lunch. And so then I logged in and saw, oh look, I'm up 245 for the day. So let's take a look at this here. This was circled because there's a 151 break short there that we end up not taking because the market is a little too sideways. And I had taken, oh no, it's right here. Here's the first trade. That is, that's a failed turn. Just a little early there actually. And then let's see, the 141 here I didn't get filled on. And then that's 174, that's too aggressive. That's the aggressive pullback, same thing there. Same thing there. These are all trades that are considered too aggressive. So we just skip them. You can kind of see why, right? These are long codes here that you end up taking losses on these here. So then what happens? This is the first I've looked at it, so we're looking at it together. Let's see, a long there. That's again just stopped out by a few ticks. That's a little painful. And then a long here on a oh, interesting. That's a break short. That is really sort of unintended, actually, when you look at that. So what's happening here is, so we're looking at this bar. Which is closing below this break level here that I just drew. But really, we know that's not the intended bar to be signaling on. It's really this bar here that code is built for. Though this does meet the criteria in that it is closing below that level when it was previously above that level. That's interesting. Sort of an accidental trade. The next bar is a 102, so that sees that little turn there. In any case, 550 there. Let's see, and then a 254. So here, this is a short here. It just looks like just a couple of ticks there as we get stopped on the pullback. Here's that 151 again. So a break lower. So we get in right there. This is a case where the reason I'm hesitating is that you could easily get in here and then get stopped to the tick, just the way that the chart is drawn. So in replay and in testing, this would be, would it be a stop? Actually, no, you'd be okay by one tick. I end up getting a better entry. Do you see what I'm saying here? Instead of, because the order is placed when the market is right there at 87.25, but I actually get a nicer entry than that. Makes 8.25 points. Market's kind of sideways there if you're looking at that. Nice fall here, and then a short here that makes 1.25. So we get short here on the failed turn. All right, and then it's one of those cases where, wow, it goes just enough that you start trailing, and now you're getting stopped out by a couple ticks before the nice fall. So there's a really nice long fall there that I'm missing out on because the trail's too tight. I think we see that again here. Yeah, right here. I did notice this one as I was scrolling back. So again, this trade is pretty amazing. That's a failed break higher. So the system sees the break higher, predicts failure. You get this simply amazing entry, and then squander it because the trail is too tight. And so we get stopped out by a couple of ticks here. So wow, a couple cases here where just some beautiful moves here. So I like what I'm seeing in terms of catching finding the spot to get in. The trail's a little too tight. Look at this. That's a nice move. Okay, so that's it for today. What was the result again? Plus 245, and we'll see what tomorrow brings. Today was interesting in that I was expecting it to be quite a bit crazier than it actually was, because the overnight range was almost 60 points, and it used to be 60 points was just sort of the absolute limit where you would even consider trading it. And now we haven't seen less than 50 points in a while. I mean, it used to be 40 points was we're really nervous to trade this, the overnight range. 40 points or greater. And now the markets have been so wild that we've gotten, I think, a little, jaded. Or jaded is not quite the right term. We've just gotten so used to it that when it drops below 60, we're like, oh, good, the markets are back to normal. But they're not. That's still really volatile. It's just not crazy volatile. So I was expecting that today, and instead I got, this is nice movement, but it wasn't super whippy and crazy. And I suppose it's possible that the adjustments we've made to the volatility are helping us here. I don't think that's the case here. I think you just have a pretty obvious sideways market, so the system's kind of keeping you out of trouble. Though, of course, that doesn't mean you missed that nice trade there. And it's kind of the same thing here again. It's going sideways, so you're staying out of trouble there. And then we take a short there. Now it looks kind of normal. But at this point, right at 7:15 is when I stepped away. I'm kind of right in here somewhere. And so how long was it before the next trade came along? So it was another 15 minutes. So in any case, effortless trading on my part. I didn't have to do anything. Okay, that's it for today, and we'll see what tomorrow brings.